Welcome, welcome. Good evening to a new weekly Wednesday webinar. Thank you so much for joining us. Thank you so much for spending some time with your United States Senate Federal Credit Union family. We're excited to see you on the attendee list. And of course, as you can see, we're going to go through an amazing topic. Perhaps a dream, perhaps a retirement dream, perhaps something that you're already living. But before you buy, financing boats, RVs, and other leisure vehicles. My name is Eddie Villanueva. I'm the official MC from the weekly Wednesday webinars and the credit union. So thank you so much for joining us once again. We appreciate you. Hope you're having an amazing day. Hope you're enjoying the weather. If it's warm where you are, if it's a little bit chilly like the DMV area, make sure that you stay a little bundled up. Especially during springtime, it's ups and downs. One day you're cold, then the next day it's warm. Maybe you want to be wearing jackets with shorts. I don't know what's your style, but thank you so much for being here. And let us know, is it a dream for you to get a boat, an RV? What do you want to do with that? Carrie, would you like to have an RV or a boat? What's your preference?
Uh, Probably an RV because I don't know, there's not a lot of water around here in Illinois.
Um, all right, you heard it from Carrie. She doesn't have a lot of wires, so she's like, you know what? Maybe I take a cross country trip with my RV. So that's one of her dreams. Kim, what would you like? Do you like boats? Do you like RVs, motorcycles? Like, do you like extreme stuff? What do you like?
Definitely a pontoon boat to go to Smith Mountain Lake. We actually have one, and I highly recommend it. Anybody on this call, get you a pontoon boat, go to the lake, go fishing, and make sure you finance it with USS FCU.
Oh, you're speaking my language, Kim. You talk about fishing. That's one of the things that I enjoy doing. The summertime is so relaxing. You just hear the waves, get a little frustrated if you don't get a fish, but it still relaxes you. So, once again, thank you so much. Please make sure that you send us your comments through the chat or the Q&A feature. And Mr. Milton, what is the commitment every single week with the questions and comments that we get?
Eddie, before I answer the question, I'm actually offended that you didn't ask me what I wanted, because
Oh,
I was gonna say I'm gonna be humble and I'll just ask for an airplane. So
that's all.
very very humble. So, but no, we will answer every single question before we end this webinar tonight. So thank you all for being here with us this evening.
That's right. That's right. I knew Milton was gonna say his answer one way or another. That's the reason why I gave him the mic. But an airplane, I like that. I know that you like Boeings a lot because the more space, the better, you said. So that's definitely, something that we can definitely talk about as well in this topic. But as Milton was saying, thank you so much for everybody for joining us. I want to give a special shout out to our VP of Lending, Miss Angie Collier. Thank you so much, Miss Angie, for being here. We appreciate you. Thank you so much. And then, my time is up. Usually 6:02, now 6:03. I think I'm taking advantage lately, guys.
Yes.
You can stop me. So I want to pass it on to our membership development and analyst, Kim Friedley, with the introduction. So, Miss Kim, I will pass it on to you.
Thank you, Eddie, and welcome everyone to this week's Wednesday webinar. Without further ado, let me just get the panelist team introduced. You know most of us. You know Carrie. She is the senior communications manager. She is the one who makes us all look good by preparing these presentations for us. All of the slides. She does a great job. Milton Aguilar Bolanos. He is the Membership Development Officer, Manager. That's who I personally report to. And we have Eddie, who is our Engagement and Events Manager. And we have a really special guest with us. We have the Director of Consumer Lending. His name is Elton Roshi. So you are in for a real treat, and he is the subject matter expert on all things lending. So without further ado, let's all welcome Elton and take it away, Elton.
Good afternoon, everybody. Good evening. Thank you for joining us for another Wednesday webinar. And today we're going to be talking about before you buy, financing boats, RVs, and other leisure vehicles. And the other leisure vehicles are motorcycles, jet ski, and also luxury vehicles and classic vehicles fall under this category as well. So it's important that we know a bit about this. It's a unique product offering that we have here at U.S. Senate, and I'm excited to talk about it. I'm gonna put myself in video off so you guys are not distracted that way. So thank you for that. All right. So as we navigate this, it's gonna be important that we are gonna be making how to make a smart purchase from the start. It's important that we start somewhere, and because it's an exciting decision, and we also want to make sure that we are understanding that it's a big decision. It's not something that you'll be able to use on a daily basis unless you want to. And also it's a long-term financial commitment. These are unique and different from your everyday vehicle purchase because it's not something that you use on a daily basis. For example, the motorcycle, you'll use that, when it's not raining, when it's not cold. Boats are the same thing. You're going to use those when the weather is nice, but the RV, you could use that 365 days out of the year, and it depends on if you like to go camping in rain or shine. So we're gonna delve deeper into this. And then, depending how you finance it, remember, it's going to be a commitment. It's going to be something that you have to make a long-term decision, and finances are going to be playing a part into it. Okay. All right. All right. So, what types of leisure vehicles are there? We have boats. And boats and personal watercraft. So personal watercraft would be your jet ski, RVs and motorhomes, travel trailers and campers. So think about a fifth wheel. Motorcycles fall under this category as well too. And then luxury and classic automobiles. So when we're talking about a luxury or classic automobile, luxury would be a unique a vehicle like a Lamborghini. Something that you won't be using on a daily basis to commute to work. Or a classic vehicle could be your 1968 Corvette. Maybe that doesn't exist, but I'm just making an example of what is considered a classic automobile. So those are the things that we'll definitely be going over as well. Okay. And the next thing that you want to consider is the price range. And this is going to vary depending what you're wanting to purchase, what it is that you want to do. The motorcycles, have a different price range than a boat, travel trailer, or motorhome. You can see that. You can typically find a motorcycle in the 7,000 to 15,000 plus range. If you want something that's higher end, it's going to be over 20,000, 30,000. It depends on the customization that you want. The same thing for a boat, depending on if you want like a pontoon boat that Kim was speaking about, or you want a fishing boat, like an aluminum fishing boat, or you want a jet ski, or you want a wakeboard boat. The price ranges are going to be varying. One of the things that now yachts fall under this category as well too. However, at U.S. Senate, we do not finance yachts. And in order to finance leisure vehicles, they have to be titled. And yachts, if they're over 25 feet, are not required by the Coast Guard to be titled. That's why we don't put in here boats and yachts, because both the yachts are excluded. Okay. And then next, you want to think about the total cost. With leisure vehicles, this is something that requires an discretionary income. What I mean by this, because these are hobbies and toys versus something that you will use on a daily basis to go to work. You want to think about, okay, what loan payment can your budget support? You have to think about the carrying costs of insurance. If you have to store it, so if you have a boat, you have to store it. If you have a motorcycle, you want to make sure you put it, in a garage, or you have to find a place that it can weather the extreme weather. The same thing for an RV. You could park it, on your lot or backyard, or you may have to create a special place to put it. All of these carry costs, maintenance costs, maintaining it, repairing it, depending if you're buying a used or new, your repair costs are going to vary. And then the seasonal cost of definitely, gas is going to be a factor if you have to hook up to electricity, at a campground as well too. Every time you use your camper, being able to replace the sewer, I should say. You have to empty that out on a regular basis, depending on the type that you're getting. And then also to being able to understand that, as I went over some of this, like for example, the maintenance cost on a boat on average is about 5 to 10% of the value on a yearly basis for upkeeping of the engine, winterization, and repairs. And then some of the costs associated with storing can be between $2,000 to $10,000 per year for slip or dry storage. And then your insurance costs can be between $30 to $200 a month, or up to $500 a month for anything that's a high value vessel. So some of the costs of boats can get up there if you don't think about those things. All right, and next we're going to talk about the monthly payment. This is something that you should fully understand. So now that we've looked at the total full cost, and not just the principal and the interest payment, let's take a minute to break down how this monthly payment is actually determined. So it's based on the amount that you're going to be borrowing minus your down payment. So if you're purchasing a leisure vehicle or a collateral for $50,000, and you're going to be putting down $5,000 as an example, then you're financing $45,000. Then you're going to factor in the interest rate. That is the cost. That is the cost of borrowing the $45,000. And then lastly, it's going to be the loan term. How long are you going to be stretching this payment, depending on your budget? And then ultimately, the principal amount times the interest rate times your loan term will determine your total cost over the life of the loan. So those are things that you want to take into consideration. And if your goal is to get the lowest payment, then you have to look at the being able to do an extended term, or if your goal is to pay it off as quickly as possible, then you want to do a shorter term. Okay. Next, we're gonna be talking about when it comes to financing, a lower monthly payment can seem like it's the better option. At the same time, it may not make the most financial sense. What I mean by that is, if you're purchasing a motorhome, a motorhome can run anywhere between 100,000 to 300,000 in general, like a brand new one that's fully loaded. It's a house on wheels. Well, so if you try to do it for 5 years, then that's going to put you out of range to be able to afford it. So most of the time, motorhomes, which are one of the most expensive purchases that you can make, you would like to stretch it as much as you can. And typically you could do 15 to 20 years to give you the ability to afford that payment. And then as you have any discretionary income, that you could pay it off sooner. Versus a motorcycle, you don't want to stretch for 10 years, especially if you're borrowing $15,000 or $20,000. You want to be able to pay it off or finance it in a reasonable amount of time, typically in a 5 to 7 year term. Anything, if you're financing of 15 to 20,000, you want to look at in that 5 year range. And then if you're financing higher, then I would recommend up to 7 years. So those are some of the examples that you want to consider, because having a lower payment may not always make sense, because you're paying more interest over time. Similar to, like, if you're buying a house on a 30-year mortgage, if you keep your mortgage for 30 years, you have essentially paid your house twice. Versus if you obtain a 15-year mortgage, then your interest costs are tremendously reduced, and makes the cost of purchasing that home make more financial sense. And the same things can be applied with any purchases that you make that are as expensive as this. So so now we're going to talk about what does it cost each time you use something. And I think that's something that we need to factor in every single time, especially with these types of leisure products. They're not being used on a daily basis. So you want to think about, okay, am I getting my money's worth? And fewer uses would mean higher cost per trip, and more uses equals better value. So those are some of the things that you want to take into consideration when you are making this the mindset of wanting to purchase. And again, like, there's no right or wrong answer, but these are some helpful guidelines or guidance that that would make the purchase make sense for your lifestyle. And again, leisure loans are also considered a lifestyle loan, because it's something that is unique. Not every consumer is going to be able to afford it. It's for individuals that have that additional discretionary income. They have, their finances are lined up. They're on a budget. They're meeting their financial obligations in terms of of their goals that they have in life too, and they just want to do something nice, for themselves or the family, to just create some memorable experiences. Like, if you can afford it, why not? So next, what happens after you buy? And that's something that you also need to take into consideration. Similarly to when you drive off the lot with a vehicle, you start depreciating, and this happens fairly quickly, or more quicker, with a leisure product, because it's such a unique it's a unique area. Because if, for example, you purchased a leisure home, like a motorhome or a boat, there's not a market like there is for vehicles. It's something that not everybody needs. It's a want. So they're going to depreciate faster because the market is very unique, and the financial institution, if they have to sell the the boat or the RV after they take possession of it, it's going to be at a great loss, because they cannot recoup the cost, since it's only there's more supply than demand for it in that respect. And then it's not uncommon for a boat to lose 10 to 20% of its value in the first year. And those are some of the considerations that you want to take into account as well. Okay, so now we're going to be thinking about, okay, refinancing new or used. And ultimately that's going to depend on your budget. That's going to depend on, do I want something newer with less maintenance, and a higher price? So that means your monthly payment is going to be higher. Or do I want a used, which may require more maintenance, cost less, and have a lower monthly payment associated with it? So those are some of the considerations that you want to look at. Loan terms, maybe shorter depending on the age of the vehicle. For example, if you were to finance a new motorhome or RV or travel trailer or camper boat, you can finance up to 20 years. If you were to purchase a used, our loan terms are up to 15 years on that. So, those are some of the differences based on if you're going to be doing your used. Also, are you going to be putting a down payment for this type of unique product? You're going to be putting a down payment because it's more restrictive with what the financial institution can finance. Most of them, don't finance more than the value. So if you have taxes, tags, title, add-ons that are not factored in, those will probably have to be paid out of pocket. So that's something to think about. And a perfect example when the leisure market exploded was during COVID, because of that unique time. So the RV market just took off because people took their families on the road. Everybody was remote, so you didn't have to go into the office, you didn't have to go into school. So and then the price of RVs and motorhomes during that time just exploded as well too. And then also some of the constraints with parts and everything like that caused the pricing to go up. So again, you want to look at the the trade-offs between what it is that you need or want in the near or short term. So next, we're going to talk about choosing how to pay for it. So, so we're going to talk about the different ways that you can finance a purchase. So you can finance this through leisure a vehicle loan. That means it's a secured request, meaning that you go to the boat dealership or the RV dealership, you obtain a purchase order, and then you provide that to your finance company that's doing the financing, and then they will place a lien on that title until you pay it off. Another option is a personal loan. But personal loans have restrictions regarding the terms and the amounts that you can borrow. So if you're purchasing $150,000 motorhome or a boat, then the personal loan may not be the best option for you because of the restrictions, and then also the loan term is shorter as well. And then the other option, is to just do dealer financing, and then just down the road refinance it with your current financial institution or USSFCU as well. So now we're going to go to the next slides, and we're going to talk about the factors that influence your loan. And everything is credit. Your credit score determines your interest rate. The debt to income determines whether, depending on where your debt to income falls, can this new loan be supported with your current income and debt that you already have? So, that's what the debt to income is. The down payment, that's going to depend on what the finance company is able to finance. So you may have to put 5 to 10% or more, depending on if you obtained extras that are not being factored in the valuation. The vehicle type and age is also another thing that you wanted to take into consideration, because newer models or newer years are easier to finance, and the older the model or the older the age, then it has more restrictions in terms of loan terms and financing amount as well too. All of these should help shape the factors for you to understand the approval, the rate, and then the overall loan structure. Now, why do we say a down payment helps? A down payment helps because it's going to help in most cases lower your monthly payment. It's going to lower the cost of carrying this loan, because the more you put down, then over the life of the loan, you will end up paying less in interest. Certain lenders may require one, depending on the type of leisure product that you're financing: boat, RV, camper, motorcycle, jet ski, the age, or again, the vehicle value, or it's called loan to value. So you can finance over the value of that. And ultimately, it helps reduce the risk of owing more than the vehicle is worth, again, because these depreciate more quickly. So you also want to make sure that you're not putting yourself at financial risk down the road. If something were to happen and you need to sell, then you can sell at or near its value, because you already took the steps at the beginning of the purchase to mitigate that risk of being upside down. So those are some of the things that you want to take into consideration again, like this is a lifestyle loan. So, you want to be able to also take into consideration, you know, how would this impact your finances 5 years down the road if one or both of yous were to lose your job, or you have to move and you have to sell, or any life event may happen and you plug it in. One of yous gets ill and is unable to work, and you now have reduced incomes, or you're forced into early retirement due to your health. So like those are some of the factors that you want to take it into consideration as well. And being prepared, knowing what you can afford is the best thing that you can do. So having why a pre-approval is so important is because, again, you are setting the groundwork of knowing what you can shop for. How many times, have we gone into a dealership and the first thing they say is, what payment can you afford? They're not asking you what price point are you looking for. They're asking you what payment can you afford, because if you give them a payment that you can afford, they're going to get you into the payment that you told them. So if you told me, I'm comfortable with paying $1,000 a month, well, that $1,000 a month is in the dealership's mindset is, okay, I can squeeze you into $150,000 um, uh, product for 15 to 20 years because you told me that's what you can afford. And versus when you say, well, I'm only looking to purchase something for 50 to 75,000. So you could see, understanding what your budget can support, and also on paper, everybody looks great. What I mean by that is, when we're factoring your debt to income, we're factoring your debt to income based on your gross monthly income and your monthly expenses that are reporting on the credit report and your housing payment. The things that are your everyday expenses, like your utilities, your HOA fees, your gas. Those things are not factored in your debt to income ratio. And then also too, your taxes, your deductions are not factored into your debt to income ratio. So that's why, when we're looking at decisioning and application, we're looking at factored in, okay, we put tolerances of what we don't want the borrower to exceed, not because we don't want to do the loan, it's because we're trying to protect you from being from being overwhelmed when after your taxes, deductions, and your expenses come out of your paycheck, you're like, oh, I don't have the discretionary income to pay this on a monthly basis over long term. So that's why we don't want to overwhelm you, and so that's why it's important you understand knowing your budget and sticking to the budget. It gives you the leverage so that you can avoid the overspending, and then you can avoid the pressures at the dealership. You already know what you can afford. You can say, stop, I already know what I want, and this is where I'm going to stay at. Next, while you're at the dealership, this is where everything that we have talked about comes together. One of the most important things that you need to keep focus on is the total price, not just the monthly payment. The monthly payment, is nice to know, but that's not everything. As we talked about earlier, your insurance, storage, maintenance, like all of those you would have to add on top. So that's some of the things you want to take into consideration. And it's very common for conversations to solely focus on the payment because American American society, the consumerism is based on payments. How much does it cost so I can pay on time? And that doesn't always reflect the full cost of owning a motorcycle, a boat, a jet ski, a watercraft, an RV, a motorhome, a luxury vehicle, a classic vehicle, all of those. And most importantly, take the time to review anything that is presented to you. Look at it, read it. Don't just sign. Don't, if somebody's covering it up, as they're going over, remove their hands to read it. Once you sign, it's a binding contract. And oftentimes, once you leave, it's hard to get, what you had wanted in the first place. So, make sure, and you're also making sure you're not making a rush decision. This should be methodical, and you need to take the time. And if you have to walk away from that transaction, walk away from it. No one, you can reassess it again in a few days or a few weeks or a month or 6 months. So make sure you're making the best decision. And also, it's important that you also look at protecting your property. You're spending money to purchase it. You want to have peace of mind, and there are certain things that you should look at, and look at gap protection. You can add that on the RVs. You can add that on the watercraft and the boats. You could add it on the luxury vehicles. That will help protect to give you peace of mind if something happens. You may say, well, how often would I crash my boat? Well, it's not a matter of you crashing your boat, it's who crashes into you. The similar thing would be like when someone says, well, I'm a safe driver. Well, I'm not concerned about your driving. I'm concerned about the people driving around you that may not be paying attention, are inhibited, that will cause harm to you and your property. So, for $5-6 a month, you could have peace of mind for that. The debt shield. The debt shield is the payment protection. The payment protection assists you in the event that there is something that is going on in your life. It's the umbrella that protects you from the things that we cannot stop in our life, whether it's unemployment, whether it's illness, whether it's death. Like those are the things that you want to protect, and you protect not just what you're financing, but you're protecting your family when it comes to making sure that you leave something behind for them, versus as well the insurance, your life insurance or is going to cover, or my disability is going to cover it. Disability payments cover about 60 to 67% of your income. Where are you going to get that 33 to 40% that is going to be missing? And also too, remember, they take deductions out of that as well. So you want to take into consideration. And also too, unemployment happens. COVID was a wake-up call for everybody, because no industry was spared during COVID from layoffs. The government shutdowns, definitely impacted every single agency in 2025, and the current one that's going on right now is impacting DHS. So, if you are, in that field or those fields, those used to be safe jobs before. There's no safety when it comes to that. So, making sure that you are taking the time to protect yourself and your family from it. So, where do borrowers go wrong, right? So, as we wrap up the main concepts, I want to be able to highlight some things that are common things that we see. They're not mistakes, but it's just where people run into, into the challenges. As I was speaking earlier, just focusing only on the payment instead of looking at the total cost over the lifetime, and not understanding or underestimating the additional costs that come with the ownership. And insurance is a big one right now because everybody's insurance is going up. It's been increasing at a clip of 10 to 20% each year. I know mine has, and I know everybody's impacted, by it as well. Storage, maintenance, and then ultimately, this is something that's very exciting, and you're happy about it. But sometimes you can get caught up and not think about um, the ultimately thinking through the decisions because you're so excited about it. Like once that high wears off, like that's when most people are like, oh, I didn't think about this. It's like, oh, I should have asked about this, or that. So just being able to be strategic, being excited is great, but also to making sure that you remove some emotion from your purchase so that you can be methodical with it. Also too, sometimes we see people go into the process without having a clear plan or budget. That is the biggest thing, that on the whim you saw something, you thought it was a great deal, and you just have to have it because it's the deal of the century. You have to step back and you have to look at the overall financial picture so that you can make the best decision. And because you're going to be putting a down payment, or you may need a down payment. Are you in a financial place to be able to remove money from your savings account to pay for this? No. Do you only have an emergency fund set up? Because if you're purchasing something, that's not an emergency. If you want to purchase something that's discretionary, you want to have savings set aside for the discretionary. Murphy's laws is what the emergency fund is for, and that should not be used because you saw the deal of the century. And then before you buy, do this. So, I just want to leave you, with a simple way to approach this if you're considering a purchase. First, again, take the time to estimate your total monthly cost. If you need help with that, reach out to your to your credit union, to your finance person that you have a relationship with online. You can definitely find calculators online that you could easily calculate the cost of this. Secondly, think realistically about how often you're going to be using it. It works similarly to you buy a machine to work out, or you buy a Bowflex and you say, oh, I'm going to use this every single day because I want to be fit. I want to look like the model that they're showcasing. Once you use it a couple weeks, then you put clothes on it. So the same thing with this, but this is a more expensive purchase that has consequences of you carrying a monthly debt payment on it unless you pay for it in cash. So you want to take that into consideration. And thirdly, compare financing options so you understand what works best for your financial situation and not what's just convenient. If you need to finance at the dealership just to get it done, do it, and then you can reassess about refinancing, as long as you have a game plan that I want to refinance in the next 30 to 60 days, if the interest rate at the dealership was high, but you just needed to just purchase the your boat or your RV. And finally, just making sure that you know where you stand with your with your approval. Now, what we can do here at U.S. Senate for you, we have options to assist you with financing these luxury items for you. We have competitive fixed rates, flexible loan terms. So the rates for a new start as low as 5.99 for up to 240 months or 20 years. We can finance up to 300,000 for well-qualified borrowers. The same thing would be for used. Used, the rates start as 6.49, and we can finance up to 180 months or 15 years, and we can finance up to 150,000 for well-qualified borrowers as well. So so those are the things that you want to know. Your carrying cost. Do you want to pay it off quickly, or if you're purchasing something that's costing you 300,000, a 20-year loan would probably make the most sense because it's a $300,000 loan. Not everybody can pay a $300,000 loan in 5 years or 10 years. They may need to stretch it out. And then, as we talked about earlier, these longer terms can help lower the monthly payment. But do you remember you have higher carrying costs, meaning you'll end up paying more for the RV or the boat versus if you financed for a shorter term. And we also offer options to refinance an existing loan that you may have with another financial institution. So, this is not only restricted to just purchases, but if you have a loan already with another financial institution, we'll be more than happy to assist you with, with financing, or I should say refinancing that as well. And then, beyond the loan itself, our goal here at U.S. Senate is really to help you make the right decision to you. And this is why we offer these webinars, to give you the tools that you'll be able to utilize, whether you go with us or not. Ultimately, that's our goal here, is to make sure that you are a well-informed and educated consumer that can make the best decisions when you're looking for answers, comparing, walking through what makes sense for you, and also being a resource for you throughout the process. And and next, you want to buy with confidence. As you think about a purchase like this, the goal is not just to make it work today, not make it till you break it. You want to make sure it makes sense over time. You want to, again, take into consideration, take into account the full cost, the usage, financing, and which will put you in a very strong position to make a decision that you will feel good about and not feel guilty after the fact. How many times have we ate a cookie or cake and I was like, oh, I feel guilty about it. You don't want to do that. You want to be confident about that. So So today, it's about giving you the information and the tools to move forward with confidence. And lastly, if you need to get a hold of us, you could reach us at 800-374-2758, option 4. If you want to apply or learn more, go to ussfcu.org/leisure. You can also apply within online banking, or you can call and speak to one of our loan officers as well. Thank you for taking the time to hear this.
All right, awesome. Thank you so much, Elton, for that presentation. We really hope you took something away from this. And again, I definitely want to emphasize the point that Elton was making. Our goal here at the credit union is to inform you, give you all the resources and tools that you need, so that when you go in and visit a dealership or visit any of those places where you might be looking to purchase whatever vehicle it is that you're looking for, you're going there equipped with all the tools, all that information that you need. And always, again, whether you finance with us, obviously our goal is to always, have you do the deal with us. But if you find a better deal out there, you're already going there with that peace of mind and the knowledge that is so necessary, especially when you're getting into this type of loans, right? I mean, um, the having those auxiliary products, right? The insurance, the protections that is so needed. I mean, again, it's truly important, and that's everything that we're gonna be able to do here for you. So again, Elton, thank you so much for your expertise. We know you have a passion for this. There's a reason why you are where you are, and we truly appreciate you coming in and doing this type of presentation for us. I'm going to hand it back to either Eddie or Kim to see if we have any questions that we might have received during this presentation.
All right.
Oh,
Oh, go ahead, Kim. Go ahead. I'm sorry.
no, Eddie, you're fine. I was just going to say there are no questions that I see. How about you?
I do see a couple questions,
Oh,
but before we
cool.
go into the questions, I got so inspired I started looking into, like, I don't know if you can see, like, bikes now. So we'll see what happens. We'll see what happens if I don't know. Let me get my bike license first, and then we can see if we can get that type of toy. Uh, but I gotta think about it as Elton was saying. You gotta be responsible with these things. Like, how often am I gonna use it? I'm already a little fast with my car, so the bike is a whole different ball game. So. But definitely I was looking into those things, into the dealers and things like that. But thank you so much for all that information, especially for those that perhaps already have experience. You probably learned something new today. And those that is your first time buying, a leisure vehicle, an RV, a boat, whatever it is that you're looking into. As you can see, you have so many options here with the United States Senate Federal Credit Union. And then one of the questions is, how long does pre-approval take and how long is it valid for?
That is a great question. Pre-approval is good for 60 days, and a pre-approval to obtain a pre-approval, we can get you one within 24 to 48 hours, if not sooner.
All right, you heard it from the expert. You just let us know what you're trying to accomplish, and we'll give you an answer as soon as we can. Are there services like Carfax that provide vehicle history reports using the VIN number?
So normally we can obtain the auto check, but because these are leisure, that is not available.
All right, perfect. As we can see, that's the difference between like a regular,
Yeah.
car loan, if you want to compared to like a leisure vehicle, as Elton was
Yeah.
saying.
Yeah. On the luxury vehicle, we can pull it because it has the same VIN type that our normal consumer auto loans have, but like a boat. So also too with a boat, when we're financing the boat, we're financing not only the boat, we're financing the motor, and we're financing the trailer that's associated with that as well. So we have to finance all three. So it's three types of collateral in one loan.
So it's interesting that you mentioned that because there's another question, and you can probably expand to what you just said, Elton. It says, what hidden costs should first-time buyers plan for? For example, insurance, storage, fuel, maintenance. So I think it goes with the things that you were talking about, correct?
Yeah, so yeah, I mean those are going to be your biggest costs is maintenance, storage, you know, the running of that as well too. You know, if eh, I mean, then there may be some hidden costs that you know you're not thinking about. So you know that's why you can have like you want to, especially for a boat, you know, it's about 5 to 10% of the engine's value per year. So depending on what engine you have, then that's you know that's what your costs are just for the maintenance portion are going to be.
Milton, take notes. You say you wanted an airplane. I hope your backyard is big enough to keep that plane. Otherwise, you might have to park at Dallas Airport or Reagan, which is the airport, in the DMV area. So, oh, BWI as well. So, or maybe, Carrie has a lot of space in Illinois. Maybe she might let you park it over there, but maybe she can bring it for you when you need it. So, is there a
Awesome.
recommended percentage of income to spend on recreational vehicles?
That is a great question. Um, typically, typically, you know, you should not be spending more than, I would say, 10 to 15% of your gross income on a leisure vehicle. For auto loans, you can go up to 20%. But on this type, you know, again, because it's something that is a want versus a need, you want to be able to control, you know, that you do not overextend yourself. That's the word I was trying to think earlier, and then I just thought about it. You don't want to be overextended.
I like that. I like that. And it goes with another question, actually. Wow, I think you're reading my mind or you're reading and
I
then
don't read anything. I'm not reading anything.
I think you're reading that anonymous users are sending these questions, because one of the questions is, and it goes to what you were saying, what are smart ways to avoid becoming payment stretched with a large leisure purchase?
Yeah, so knowing your budget, that is going to be ultimately what you should think about first and foremost. And so, you know, as I gave you the example earlier, that on paper, everybody looks great
Mhm.
on paper, you know, but ultimately, once you put pen to paper and you write down all of your expenses, and that means all of your expenses that come out of your account every single month, not just what's on the credit report, and then compare that to your net income, what is in your account or what goes into your account every pay period, then that will give you the indication of what you can afford.
It's very important what you mentioned, Elton, because I have heard so many people like, like friends that I know, close to me, how they're like, oh, I'm able to afford this vehicle. It could be
Mhm.
like a very expensive vehicle. And I'm like,
Yep.
oh, how did you come out to that conclusion? And they're like, oh, because, I can make the car payment. And then they don't consider like, okay, car payment, you can make it cool. That's, that's awesome. But it comes with maintenance. If something breaks, something like a specific part of the vehicle, it can get very expensive. If
Yeah.
it's an exotic vehicle, is there a lot of dealerships that can work on your vehicle as well?
Hmm.
Or you gotta go to like the specific dealership, which will cost you a lot as well. So it's one
Yeah.
of those things, as Elton was saying, just to consider that. Yeah, on paper it might look good, you might be able to afford it monthly, but are you ready to, for those fees for storage? If it's like diesel, for example, instead of like regular fuel or whatever, the case might be.
Yes.
Just be very considerate of like the things that come with, the extra costs that come with this, which, as Elton was saying here at the credit union, you let us know what your ultimate goal is, and we can talk to you and see the different options that will best fit for our members, because that's the reason that the United States NFL Credit Union was created back in 1935. And, fast forward to 2026 is people helping people. So just one of
Yeah.
the things that we want to emphasize.
Yeah, and Eddie, if I may add, just to one of the things that Elton mentioned that really, stood out for me is that the typical question, when you walk into a dealership, they're always going to ask you, um, what kind of payments are you looking to stay in, right? Not how much are you looking to spend, but what kind of payments can you afford? If you give them a dollar amount, they're going to try to get you the highest loan for the longest term, which will allow to lower those monthly payments as much as they can, but they can push you into something that you had no idea. And it all comes down to how prepared are you with your budget? And this is a great segue because if you come back next week, next Wednesday, we're going to tell you all about how to build your budget, creating a plan that works best for you. And again, Elton has been emphasizing the budget, budget, budget. It almost feel like and I don't know, Carrie, did you send a little incentive for Elton? How many times he was going to say the word budget?
No.
Because that's the presentation for next week. So it's all about budget. Learn how to create a realistic, and that's the key, right? Realistic, especially if you're thinking about buying one of this type of vehicles, right? A leisure vehicle. Having a realistic budget is so important. And again, be informed, have the tools that you need so that when you go and you are on the other side of the table and the finance manager is going over the terms with you, you are not going to fall for any. Again, I'm not saying that they're trying to get you to fall into different tactics, but dealers are dealers, and their goal is to make as much money as they can from you. And so come and be with us next week. Again, we're going to tell you all about how to create realistic budgets. What are some of those priorities that you should have regardless on a budget? And most important, what are some of the goals that you want to accomplish that can easily be put into a budget that will give you that clear roadmap on how to get from point A to point Z, and then help you achieve your financial goals. So with that being said, Elton, we want to thank you, sir, for taking your time I know you're a busy person, but you enjoy doing this type of presentation. So, and then we enjoy having you here with us as well too. So this has been great. I mean, I'm sure that we'll probably get more questions to ask later, because this presentation is being recorded and we're going to have it in our website. So we encourage you to help us spread the word. If you enjoy this type of presentations, or the ones that we've done in the past, or if you have any suggestions, please, we're always open to feedback. And again, thank you all for making time. Elton, appreciate you, sir. Be safe, and let's have a great rest of the week.
Thank you, everybody. Have a